Thank you again for joining us on this Cup of Joe with the Adonis Agency. Today I want to talk about whole life. We talked about the term, we talked about the universal and the variable. So today it's the whole life policy, which is our fourth and final type of life insurance policy. What's great about the whole life policy, right? The whole life policy is as long as you pay your premiums, you have your insurance for your entire life. But there's more benefits to the whole life. What I mean by that is you get a guaranteed cash value accumulation. From the day you sign your policy, right, you get your illustration, you know how your cash value is going to grow for the life of the policy. In addition to that, a lot of insurance companies now, though it's not guaranteed, but they offer dividends. So a lot of insurance companies now do give you a dividend that's not guaranteed, but your cash value is. So on top of your cash value, a lot of insurance companies give you an additional dividend on top of that. Now, the difference between the cash value in the whole life versus the cash value in a universal life or a variable universal life. There is a possibility if you take out the cash value in the universal life and the variable universal life, you have to pay that back or it offsets, or you could compromise your actual insurance. With the whole life policy, not so much, because what happens is as long as you pay your baseline premium, right? If you take out a loan on the cash value, yes, it's recommended to pay it back, but you don't have to. What happens instead, where if you take out the cash value, God forbid at your death, when it happens, your beneficiary gets the death benefit minus the cash value that you borrowed. So that's one of the policies where if you needed to take out the cash value, you can without having to worry about paying it back. So it's a great way of saving. It's a great additional saving tool. And the other thing about that is too, since we're on the topic of savings, roughly around year 11, year 12, you'll find that in most whole life insurance policies, everything that you're putting in as far as premium dollars, your cash value increased by that much starting around year 11, year 12. What I mean by that, so if you're paying $1,200 a year in premium, which is roughly about $100 a month, right? In year 10, 11, 12, you'll see your cash value accumulation jump by the premium dollars that you're paying. So in year 11, you might start off the year with $10,000, but when the year finishes, you'll end the year at $11,200, which is the exact amount of premium that you're paying. So you're actually forcing to save. And again, you could borrow that money without ever having to worry about if you don't pay it back or your insurance get compromised. The ideal candidate for this person, for this type of policy, is anyone that could afford it. It is the most expensive type of policy, type of life insurance you can get. So what I normally tell my clients is the younger you are in getting this type of policy, the better off you are. Because remember, the premiums is a factor of your health and your mortality, which is age, health, whether or not you smoke. So the younger you are in locking this policy down, the better off you are. So what I want to do for my son personally is I want to get him a whole life, because my thing with that is once he's 20, once he's 21, I could gift that to him, make him the owner, and that's one less thing he has to worry about. He'll be getting the savings, he'll be getting the dividends, and he'll have the guaranteed death benefit that he could pass on to his kids, and one less thing for him to worry about overall. With that, if you have any questions, please feel free to give my agency a call, the Adonis Agency, 631-390-8568. We look forward to hearing from you, and have a great day. Thank you.